Hello everyone, welcome back to another daily forecast video. Today is the 27th of May 2021. So today is the Thursday, 4th trading day of the week, and today we are going to make it simple and fast. First we have the Nasdaq. I think I did post a analysis or a forecast on the Nasdaq yesterday, and so basically this is the chart. So let me just quickly go through what I've said. So Nasdaq, along with other US stock indices, has been recovering a big chunk of losses since last week. So this is the recovery, and obviously we are not out of the wood. And if we end, do we sell or wait? So there's a pretty good chance to see the price, the market tank for a second time, and one of the reasons is that the pullback is still well lesser than 10%. And if you go back and look at the major pullback up to early 2020, you will have realized every major pullback went over 10%. So so on and so forth, and of course we have formation at bearish bet and stuff like that, and the Fibonacci level between 61.8 and 78.6%. Let's go to the chart right away. So I think there's a few things we can look at. You see, I think there's an M shape, right, on the technical aspect. There's an M shape pattern right here, and if you go to daily chart as well, the reason, one of the technical reason why they actually fell that much is also because of this M formation. So right now in the 4-hourly chart we have something similar as well, and indeed up to now it does seem that it's really forming this M formation, and price does seems going to fall. And most importantly, there is really strong resistance being presented right here between the 61.8 and 78.6% of the Fibonacci retracement. Of course, we have a harmony pattern, a bearish bet, and very importantly, as mentioned just now, if you look at the entire pullback right here, all the way, it is about 78%, right? So let's just put it as 8%. But however, if we were to go to the day chart and if we look back at the previous pullback, some of the major pullbacks from 2020 onwards, then you'll be able to see that the pullback for every major pullback is at least 10%, right? This is 11. This is about 12%. Right here, this is about 14%, right? It's coming to 15%, and of course, this is due to the COVID-19, and which actually fell 30%. So of course, I'm not going to talk about this. Now, right after this, we can see that every major pullback is at least is well over 10%. So there's a very good possibility, a good chance that the stock market might continue to plunge even further. I mean, we are still in the inflation risk and stuff like this. Not going to go through too much of the fundamental. Today I want to make it quick. So this is it. And if you are thinking of selling it, I think you can actually consider it right now, and you just have to have your stop loss somewhere above the 70.6% level or the previous high right here. So that's as simple as it is. And let's move on to the other one, which I have mentioned as well, which is the US oil. So up to now, although it haven't really came down, but it is also forming somewhat like an M shape, or I don't know what is it called. But most importantly, we are seeing a lot of resistance at the top. If price is not able to go up, then obviously it's going to go down. So this is another trading opportunity you can look at for tonight. And moving on, let's take a look at euro against the US dollar. So euro against US dollar, we've seen that the price has fallen yesterday, came all the way down, and it reaches this level, right? This is a very nice demand zone, and very near to the bottom of this entire riding channel, starting from early April or the beginning of the April. So this is like a, wow, this is like, it's like a 2-month riding channel already. So definitely there's support. Definitely we are seeing higher highs and higher lows. Everything on the technical basis is pointing to a stronger euro against the US dollar, or rather a bullish trend right here. So this is another one you can consider to buy right now with very small stop loss just right below the previous low, maybe right here, and you are looking at a gain all the way at least back to this level. Let me just draw it out. All right, this is definitely the breakout of this M shape as well. So there might be some supply, of course, resistance as well. So once you reach here, this is where you want to consider maybe take some profit or whatsoever. Then of course back to the previous high, and of course we can continue to look for even higher gains for the Euro US dollar based on the bullish trend, yes, right now. And last but not least, I just want to touch on the gold. Alright, so gold also started the pullback, consolidating right now in a somewhat like a descending triangle. But most importantly, we are still seeing that overall it is still going upwards. Alright, still going upwards. There's supports right now at this demand zone, which I've left it right here. So we've been seeing a lot of supports right here, but is there a possibility it continues to push back a little bit further? Yes, why not? Right, look at this moving average. There's a possibility it goes slightly lower back to this zone. As you can see, this is a demand zone, because this is the breakout. All right, this is the breakout, so which is why this is a demand zone. And if it goes down, oh well, then we can look to buy the gain right here. And if you were to pull a Fibonacci, okay, swing low to swing high, this is between 61.8 and 70.6%. But based on my experience, there is a very good chance, right, that if it continues to stay supported at the current support level, 1892, there's a very good chance it might just jump right the way. And if you were actually waiting for this pullback, you might miss the entire trend later on. So you can actually try to go in half of the position, or if you really believe that you will still go down a little bit further, you just want to wait for the best price, then of course you just wait for it to pull back. But however, you got to just need to know that you also risk the opportunity cost as well. So this is something just for you to consider. Right, it really depends on your own trading style. There's no right or wrong way of doing it. Right, as long as you know what you're doing, you have a trading plan, you know where's the risk and stuff. So that is for gold. All right, and that's all for today. Hope you guys enjoy my video so far, and the trading opportunities that I've presented so far has been helpful. All right, so see you guys tomorrow.